Hi friends, Kurt Triebold here from One Tree Hill, and this is your latest market update. Over the past few weeks, there's been an unusual amount of market-worthy information to digest, so I thought it would take a couple minutes to touch on the highlights. First, the Delta variant. The relatively new Delta variant is certainly a major concern, but we believe increasingly widespread vaccine distribution and a better understanding of how to contain the virus will help limit the economic impact. It also appears that the variant is more contagious, but not as deadly as the strain we dealt with in spring. From an economic perspective, the new restrictions are likely to be limited and regionally based. Europe has been dealing with the Delta longer than the US, and their progress on containment efforts without major added restrictions suggests the US can do the same. Our biggest concern from a market's perspective, though, is the possibility of further global supply disruptions and their potential impact on the dreaded transitory inflation. At this point, the Delta variant may be a catalyst for increased market volatility, but we believe economic and earnings momentum can still carry the day for further market growth. Second, corporate earnings. Amazingly, the economy is still full steam ahead as we once again raise our 2021 and 2022 S&P 500 earnings forecasts. To date, second quarter S&P 500 earnings are tracking to a year-over-year increase of 89%, whereas revenue growth is clocking in at 25%. In fact, 87% of companies are beating revenue estimates, and similarly, 85% of companies are beating earnings estimates. These rising estimates and positive third quarter guidance suggest strong earnings momentum is likely to continue. One thing to keep in mind with all the demands and supply chain shortages that have come from our COVID rebound, inventories need to be restocked, which may provide for an additional lift of stocks and provide further momentum for global production outside of base consumer demand. Third, inflation. For quite some time, we've been talking about the real prospect of inflation slowing down the current U.S. economic expansion. The Federal Reserve has been consistent since spring that much of the inflation that we are experiencing in our daily lives is in fact transitory in nature and will subside once supply chains get back into equilibrium. Well, at this point, it appears the Fed has been accurate. In fact, if you look at the 10-year Treasury since the end of March to today, the yield has actually fallen precipitously during a time that it should have increased if inflation was truly a concern to the markets. So at this point, we don't see significant structural inflation concerns to dampen the current run of economic growth. Lastly, congressional spending. Moderates and progressive Democrats in Congress are squabbling over legislative priorities, but this has been going on for months now, and the bottom line is Democrats still hold slim majorities in both the House and the Senate and can pass key legislation once the bargaining between party wings is done. The Senate has already passed the traditional infrastructure bill, which includes about $550 billion in new spending, and the bill is awaiting House passage to move to the president's desk. Meanwhile, congressional Democrats are trying to pass a budget so they can work on a larger bill under the reconciliation process, which only requires a simple majority to pass in the Senate. Democrats disagree on which should come first, but we believe behind the scenes this is largely about gaining bargaining leverage on the larger bill, not potentially undermining the president's legislative agenda. Our base case remains unchanged. We expect the two bills combined to total between $2 and $2.5 trillion in new spending over the next 10 years. Yes, we have to pay for it in the form of new taxes, but that doesn't seem to be a concern for the market or voters at this point. So in sum, the overall news is good. Of course, we diligently monitor for cracks in the facade. However, for the moment, the economy continues full steam ahead. That's it for this week's market update. Hope that was helpful. Enjoy the rest of your summer. Stay well, everyone.